Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Commodities. Let's look at the dollar, gold, miners, oil, and natural gas. We'll start it with the dollar. So the dollar on the daily time frame, you could definitely still consider this a bear flag, considering the size of the dump and the size of the bounce. It's very weak. We're looking down at 95.84 as our support, and if the bulls are going to try and negate the bear flag setup, they're going to have to see a break of 96.39 and get some follow through on this bounce attempt. Obviously, if you are a gold bull or a miner bull, you want to see the dollar break that level bearish and see continuation down. The most important support that I am watching on the dollar is the monthly uptrend. We are still in a monthly uptrend, and as long as that is the case, the long-term outlook is bullish on the dollar. Lose the monthly uptrend, and that significantly changes. It's the same for the S&P 500 for me. People talking about bear markets and recession and all this stuff. It's bullish as long as we're in a monthly uptrend. That's the long-term time frame. So for the dollar, that level is down at 95.03. If that level breaks, it will be extremely notable. And from there, I would look at the yearly chart. This is actually the 2-month. Let's go 12-month. So the yearly chart, if we were to lose the monthly uptrend, that would tell me that our yearly higher low has likely not been set. And we would then look to pull back down into the potentially the upper 80s. That will be interesting if that does take place. But for now, it's all about the monthly time frame. That's what we care about, and 95.03 is the most important support level for the dollar as we head into the second half of 2019. So gold is still healthy, but this is not the way that the bulls wanted to end the week last week. The reason being, this is a daily bull flag, and when you see a daily bull flag form, you want to see continuation and higher highs. And the fact that we saw a bull push up towards the highs, and then we faded and closed fairly weak, it's a little bit of a red flag, because if we were to lose 1398, I personally would consider that a loss of the daily uptrend. We have our top of the bull move, our low of consolidation, the bulls attempted continuation, and if they fail and drop to a lower low, that loses the daily uptrend. That being said, we would then zoom out to the weekly chart and look for a weekly higher low to form, considering we have seen 6 green weeks in a row. So pretty much if that level breaks, weekly consolidation is underway, and if that level holds, we're looking up at the high of 1439 as the level needed for continuation, and it's going to be key the next few days. I've also been noticing, most recently, the correlation between gold and the S&P 500 the last month. And obviously we know that that's not a common correlation that we see, but if I were going to put this into bars in the background, so this is SPY in the background of gold, and you can see that starting in June, we had a bull move. Look at them consolidate at the same time. 3 days of a pullback on the S&P 500, 2 days of a pullback on gold, little red day mixed in there before continuation. S&P 500 started consolidation about 2 days before gold, but then gold pulled back, and they both found their little daily higher low right around the same time. So the charts don't line up exactly because gold is trading longer. Gold has daily candlesticks on Sunday night, whereas the S&P 500 does not. But generally speaking, you're not going to find, I mean, if you scroll back, you're not going to find a ton of correlation that is this significant with the daily higher lows occurring very close to each other. So that's a pattern that I'm keeping an eye on. And if you are a miner trader, you certainly want to see that continue, because every time the market and the miners go up at the same time, or I should say the market and gold goes up at the same time, that is best case scenario to be playing a bull miner. Imagine it just wind currents and you're sailing a ship. And if the ship is the miners, you want both wind gusts from the S&P 500 and from gold going in the same direction. If you have gold going up and the S&P 500 coming down, it's a little bit of a headwind, limiting the size of the bull move that those miners do see. So looking at gold, or I should say the miners, senior miners, GDX, it's a little daily higher low trying to be a bull flag. Support is down at 25.05, and if we can see a bull break of 26.25, that will be continuation of the uptrend. If we lose 25.05, we're going to be looking at the weekly time frame for consolidation, and these were weekly bearish reversal candlesticks this week, And the candlestick shape is noteworthy, but I want to know what's the trend doing on the shorter term time frame, and has it been lost? So the daily uptrend has not been lost, but if it does break, then the weekly consolidation is underway. And again, it would be healthy on both gold and the miners to see a weekly higher low, and those that missed the initial move up will probably be looking for an entry. GDXJ, same story. Support is 34.07. Bulls want to hold that level. Have to break 35.98 for continuation. If we break that support, weekly consolidation will be underway. Oil on the daily time frame started its pullback. This was certainly due, and we had the bulls in control essentially 8 days in a row. Now we're looking for a daily higher low to form. The last one was down at 51.48. So anything above 51.48 is a higher low on the daily time frame. So bulls have a lot of space to work with. Only if we were to see increasing bear volume and a pullback under $56 would it start to be a red flag. Bulls would love to go from rejecting from exponential resistance to then holding it as support as we see the bull cross of the 12 and 26 period. Just visually speaking, I would say if we break $56, the odds of continuation are less likely, and it would then be more of an equilibrium. So if we can hold 56, we'll be looking for continuation for the oil bulls. And if we break 56, that's when we'd be looking more of an equilibrium pattern as we head into mid-July. Keeping in mind that just like the dollar, the most important time frame for me is the monthly. For bigger picture, oil is the monthly as well. And we have our high, low of the dump, lower high, higher low. This monthly equilibrium is setting to break sometime in the next 3 months, I would say. And that's going to have significant implications on what to expect for Q4 2019 on oil. Natural gas. So the setup for the inverse head and shoulders pattern still remains, with the left shoulder, the head, inability to break 2412 would mean if we can't break that level, we have to consolidate and form a daily higher low, which would be the right shoulder, and then a change in the daily trend, which would be the first time in a while, would be notable. So the plays then in that scenario are either number one, shorting, going bearish natural gas with 2412 as your stop. Number two, you're looking to buy the higher low with 2156 as your stop. Or number three, you're patiently waiting for a higher low to form and for a bull break and entering on that bull break. Entering for the higher low has higher risk and higher reward. Waiting for the break, lower risk but also lower reward. Weekly time frame, we would then just be looking, if we do change the daily trend, we then zoom out to the weekly, and anything under 2688 would just be a weekly lower high. So lots to be watching out there in the commodities space, certainly seeing activity pick up with gold, and oil has been having some nice volatility as well, so we'll continue to track it. I hope you're well, hope you had a good weekend. We'll check back in throughout the week, do good things out there. See you soon. It's the season of baby birds. This mother's sitting on a nest, and I'm pretty sure there's eggs underneath her, so sometime in the next couple weeks, we'll have some babies to watch there. Turkey babies, geese babies, duck babies, bird babies. I need to get a bunch of feeders put up. That's the weekend task for now.